Hey, how are you?
Hey,
How are you guys?
We're doing good.
yeah.
Great. Love the hats.
Thank you. We're just talking about the craziness out there in the bank world and the markets and everything else. It's been interesting times.
I'll tell you what, there's been some really interesting stuff though that's come out of this. So, first, I think we've found an additional 100 million bank experts.
Yeah.
That's for sure.
We found out who knows how to keep their mouth shut and who doesn't.
Yes.
And that's interesting. And then also something,
Who's screaming fire?
right? Yeah, I mean, people are like,
Like,
I can't. My voice is getting weak from screaming fire.
Yeah.
Something else that happened, I think, is so cool. When you know, like the theme of bankers helping bankers, right? You see these 10 banks or 11 banks come together to put deposits in another bank to shore up a bank. I mean, when's the last time you saw that one? I've never in my life seen anything like that.
2008, we didn't see anything like this.
That right there was something I think a lot of people just missed the uniqueness of that moment. That's a first. And that was very special and very cool.
Yeah, I mean, Silicon Valley Bank is not very different from many other banks right now in terms of, they saw deposits flow in 2020, couldn't deploy them fast enough, put them in bonds, Fed raised rates, and now here they are underwater. Like, it's very simple.
We're done. That was the whole thing.
We broke the bond market raising interest rates too fast.
That's awesome.
Okay, that was a great video. Bye.
I know. I mean, that's
in a nutshell.
Yeah.
Well, for 5 years have been on this show talking to people about, the risk of a digital bank run. It doesn't take, I think we ended up doing the math on it. And it was $1 million a minute.
A minute. I saw that. Yeah, it was fascinating. I mean, pre-SVB, we're going to start talking about that like pre-COVID and post-COVID. So pre-SVB, I think, people were still concerned with deposit outflows and the speed in which outflows were happening at all of the community banks. And people pointed to that. So the last time rates went up this fast, the iPhone did not exist. So to move money, you were going to a branch or writing a check, or so just the velocity of payments didn't happen that fast. So we were all aware of that. SVB just kind of, was the prove that thesis. Yeah.
Well, and this is where this I think is so interesting with all of the products and the things that Upgrade's doing now. There's IntraFi, Rich and Tang, other people that do some really neat things to try to protect. But the idea that it's a sin to have over $250 million or $250,000 in deposits, just I ask people, how do you think Applied Materials makes payroll?
Right.
There's interesting things out there, but I really, if you don't mind, if we can just jump into, because you guys have done so many cool things
on deposits. It's funny because as we're talking about all these things and dealing with discussions with our partners, we're also front running. We still have deposits available for folks. So the deposit program at Upgrades, we started it in 2020 and then liquidity exploded and nobody was interested in our deposits. They had their own. Yeah, so we put it on the back burner. We then relaunched it in September of 2022. So the way it works is we still use our partner bank, Crosssell, who originates our loan product. They're the custodian for our deposits. We have a high yield savings. Right now, I think the rate is around 4.3. And we gather all these deposits. We're not a bank, so we're not doing anything with them, but we're sweeping them to our bank partners and our credit union partners in exchange for loan purchases. So we're pricing them aggressive, so cheaper than FHLB, cheaper than places you could borrow in IntraFi, Rich and Tang, things like that, because we make on the loans such that we can price them that aggressively. So it's been exciting. We've got about 7 folks doing it to date, and we think, given everything that's going on right now, we're going to have a big inflow.
It's so cool.
There's been a lot of talk, right? I mean, a lot of conversation. Look, I think if you went back and looked at, it's quickly how funny and quickly these conversations change and go away from whether it's like green energy. That was a huge deal 8 days ago. Right? I haven't heard a word.
Old news.
Right. But I think we've got a similar sort of social conversation going on around deposits and banks, right? And so everybody's trying to figure out, how do we help? And I think it's huge that people have actually thought about this in the past and gotten ahead of it, like you guys. That says a lot.
You're doing this up over the weekend.
Yes. But it is cool to see that a lot of people are trying to. I mean, hey, who really cares if these things are super impactful, or if people are just talking and trying. But it's cool, to your point, to see so many people at least making an effort. That's pretty cool.
I got a story I got to tell you guys.
Okay.
Okay.
All right, let's hear it.
So a long time ago in a galaxy far, far away, these folks from a new company called Upgrade came to Austin to sit down and meet with us and said, let's do this partnership together. And we were a little leery of doing that one. And it's like, I don't know, kind of a startup type of thing if we should do. And we turned that down. And I'm telling you, I don't know what the billions of numbers are right now with your company, but we always talk to people about when they're like, y'all are so smart, you're such experts. I'm like, no, let me tell you how stupid we really are. We turned down Upgrade. And so that was one of the things that I love. It's my favorite story to tell people when everybody starts telling us how great we are. I'm like, not really.
Hey, we're back at the table, so that's all that matters.
There you go, man.
It was just one of those things where it's like, I bet you've told that story around a campfire 100 times about how stupid the biggest mistake we ever made.
We've done about 21 billion to date across products between personal loan, card, auto refi, just to salt the wound a little bit. Yeah,
there we go. Take the knife out. Oh my goodness.
Well, look, it's kind of the previous point, right? It was a little bit of a different time then, for sure. But you guys have been a part of changing the times. And I mean, I can see that. Yeah. I know you guys can see that. That's pretty cool. I mean, we occasionally have, you know, in a small way, things like that pop up where it's like, wow, everybody's talking this way or that way. And that was our idea, you know. You guys changed a pretty considerable part of an industry and how things get done.
Well, both sides. Credit unions. What do you have, like 600 or 800 credit unions as well? I mean,
around 200.
Okay, well, you'll get there, don't worry. I'm pretty sure.
Yeah.
What Jay have done though, and this is something I'd really like you to share with everybody because you can tell the story better than I can, is starting out from a little lending program to all the way to all these, you know, the sweeps and everything else that goes on today and all the other product offerings along the way. The foresight, hey, everybody can get lucky, but you don't get $21 billion lucky, right? Right. So how did you, I mean, first tell us each of the different programs that let those things evolve into the market ahead of time.
Yeah, so the personal loan product is what we started with. So this is your traditional debt consolidation loan. Kind of credit unions kind of invented a signature loan and banks offer it. And that was our first product, the personal loan product. From that, you know, we take a look at what are people doing? How's the consumer behaving? They're running up a credit card and refining it with a, you know, origination fee, personal loan. What we've seen at, you know, platforms that have been in business even longer is there's a lot of repeat borrowers. So why is the consumer doing that? Running up a credit card and refining it with a personal loan over and over again. The better product for them is the upgrade card. So the upgrade card is not a credit card, not a personal loan. It's kind of a hybrid in the sense it's an unsecured line of credit. The borrower has a card access device. They go out and use it. And if they don't prepay at the end of the month, it's fixed out into a fixed rate, fully amortizing term loan. So the borrower is forced into that responsible payment cycle. They'll pay P and I each month on that we call it a subline or a micro loan. If they don't use the card, no additional loan. Every time they use the card, if they don't prepay, additional loan. And they'll have a kind of a stated due amount instead of that concept of minimum payment. So we call it PCL or personal credit line. That was our product number 2, which was really our most innovative in terms of trying to change the consumer behavior from running up high APY credit cards and refining them with a personal loan, get into a more responsible product, PCL.
Yeah, you almost penalize yourself if you don't act responsibly.
Yeah, that's great.
But you've also got the flexibility for an emergency.
I love it. That's a complicated product to build. I mean, can't tell you how many times I've walked in Bank ABC, right? And it's like, how do we turn a line of credit and get it hooked up with a card? Everyone
always is talking about the card access. Yeah.
Brilliant.
And it gives a little credit protection in the sense of, you know, instead of $30,000 out the door day one with a personal loan, with a card, you can see if they're performing, they're paying on time, you can raise the line. We re-underwrite monthly. We see they go delinquent on their mortgage, freeze the card. So it's kind of adds some protection to an unsecured product.
Very smart. Very, very smart.
What'd you do next?
Next came auto refi, in terms of just a lot of our partners wanted a secured product. So we are doing some auto refi right now. But then came deposits, which is our most exciting. So as I mentioned, we started with the checking account in 2020, savings account. We kind of revitalized and relaunched in 2022. And we're doing that as a deposit swap for any of those products I mentioned. So if a bank or a credit union wants to buy personal loan, we can swap them with deposits. Same with card. And depending on how much they want to buy, we're getting aggressive on the ratio. So if they want to buy $1 million a month, we'll give them $1 million deposits. They want to buy 10 million a month, maybe we'll give them 20 million in deposits. So it's a nice kind of an arbitrage in the sense, you know what you're expected to return on the product in terms of the credit, you know what you're going to pay on your deposits, and you'll keep the deposits for the life of the product at your option. So if a bank is, customer wins a lottery and they want to put the deposits back, they can, but they're at their option for the term of the loan.
Very cool.
For anybody that shorted SVB or any of those cool things, right? But yeah, man, this is so neat. I wish bankers could understand just what do you have, and what's coming to you from your basic providers that allows you to compete against Upgrade. And we always kind of preach to everybody. I don't like that word preach, but advise. I don't like that word either. But
I don't mind advise. I don't like consult.
Consult,
right.
Watch out for that word.
But yeah, man, you're not going to compete with FinTech.
Got a partner.
But FinTech is wanting to partner with you.
Right.
And they're beating your door down. I've got another one that came in this morning, and another one yesterday of, hey, we're looking for a sponsor bank, right? And so these things are out there all over the place. And one of the key things that I think this is maybe the most opportune moment to ever scream, the opposite of deposit concentration would be deposit diversification, right? And FinTech is the epitome of deposit diversification.
Right. I think to Rebecca's point, we're going to have, in so many ways, you're going to point to SVB as the moment in time. Yeah. Right. Like this is going to be
pre and post.
ADB, man.
Right?
Yeah.
Now we're going to say SVB.
But I mean, it was the first time you saw maybe not the first time, back myself up, maybe more like the last time we saw the traditional financial system explode from a very traditional government-backed line of business, right? But it was broken by some weird thing in technology we all hadn't experienced before. Let's call it velocity, right? Or we could call it Twitter if you want, whatever. Right? Sorry.
I think velocity is better.
Yeah, man. Yeah. So if you just think about it, we had a lot more. I mean, Fed now coming out, right, in real time.
Because this isn't fast enough.
Yeah. So
in a minute we can beat that.
Right. And I think in a lot of things you would have to say that speed is one of the first things that really breaks your stuff, right? I mean, think about building software. Speed and velocity is the thing that always breaks you first, but there's a lot more complicated things that typically come after that mess you up. So if you just look and say, hey, this was a moment in time that was really interesting, we're going to see a lot more FinTech opportunity and partnership to solve for things, not to be standoffish towards.
Yeah.
I thought, can you imagine their company trying to grow that fast, that many billions at that velocity, to manage that in a way that it still works?
You have to be very purposeful to do that. Right.
Yeah. Speed is, I think, probably the competitive edge to all FinTechs. It's just the speed in which we operate.
You bet. What else is going on? So tell us a little bit. I'd love to kind of pick your brain in the sponsor bank realm. So, you mentioned Cross River, obviously huge fans, have known them a long time and good friends. I can't say enough good things watching so much that they've done that I think a lot of people aren't informed by. But I mean, let's call it an innovation partner, right? And things that you guys have built, obviously from your side of the house, there's been a lot of reliance on a lot of things that you probably needed. And I would imagine they've been a damn good partner there to kind of help build and work through these things. Is that a fair assessment? I mean, in the general spirit of bank FinTech partnerships, right? Does it feel like a partnership or more like asking permission from mom and dad?
No, it's 100% a partnership. Cross River has been an absolutely excellent partner, and people, constantly want to get into that business. Like you said, it's sponsor bank or originating bank partner. People approach us all the time. People want that business. It's lucrative, but it's also difficult, and you have to move as fast as the FinTech, and you are still the regulated institution on the hook for everything. So I mean, sponsor banks, I think for your super innovative banks, I mean, there's opportunity there if they're tech savvy to get into that space, to break into that space. But we've definitely seen the folks like Cross River just leading the industry there, and there's others like WebBank, et cetera, that just have been in it for some time.
Right. Well, I mean, Cross River, I think they kind of began all this process about 2008.
Yeah.
So, this is not new stuff for them. And this is one of the things I think we always talk to new guys about. You want to be a sponsor bank? You don't have to jump off the deep water. I mean, you can put your toe in the
Start
water.
small. Yeah. But
one brand and do something fairly simple, and you'll learn so much along the way. But it's kind of a, let's call it the new era of
Yeah.
banking, that you got to get into this game, because everybody's doing it, man. Right? It's like streaking in the 70s, right?
But it's like, if you think about this, it's like everybody for the Instagram post, right? We want to simplify it into like the 3 easy ways to blah, blah, blah. There's a lot of different ways to be a sponsor bank, right?
And not all of them are.
They're not, there's not like, what's the best practice for how to become a sponsor bank? It's like, I could name off 9 different ways with 30 different providers, and 7 of them just doing it with a.
You could be a bin sponsor. You don't need to be an originate. There's so many different things you could do if you're looking.
Like being a defensive coordinator in college football.
You bet.
Depends on who you're playing, man.
Well, I mean, a breath away from that concept, right? A little bit slightly more innovative on the traditional side would be partnering with you guys.
Yeah. I mean,
All sort of accomplishing the same general direction, right? Am I crazy there?
No, 100%. I mean, that's what we tell folks is like, sometimes people think, well, we want to make those loans to our traditional field of membership or their, where their banks are located, but they're not. So some exercises we've done for partners is take a look at if we have any type of information on where our partners are banking, if they're banking with that bank. And it's happening. So they're coming to us even though they use you. So it's a great way. And that's something Upgrade uniquely offers is cross-sell abilities. Although we do service everything, folks traditionally want to service because then you can cross-sell. We allow folks to cross-sell. So that's something that banks and credit unions have loved about our program is that they can attempt to deepen the customer relationship and reach the people in their geographies that perhaps they're not reaching. Maybe they have their core banking, but not their credit products because someone wanted them to come into a branch or ask them for documents they didn't want to come up with, and it was easier to do it digitally.
Can you help them? Let's say I'm a bank in Purcell, Oklahoma. Could I expand my geography by working with you?
Yeah, 100%. And we can get very creative for folks. We've helped set up some CRA programs. So if you're lagging in the CRA, we can do a CRA kind of targeted pool of product. You guys are smiling. Yeah, exactly. So we've done a variety. We can target kind of in your footprint, like you just want to stay core where you are. We can target the peripheral, like if you're trying to expand slightly, full national, CRA, whatever you want, because we acquire customers nationally and it mirrors the US population. So we have highest concentrations, obviously Florida, Texas, New York, but everywhere, just kind of mirroring the regular population distribution.
Does your bank do that?
Well, I'll give you all a funny one. I love, you stated it a lot better than I would have and have in the past, but sort of the competitive nature, right? I had one the other day where I had a fintech was just some people that I knew past life, right? And they wanted to talk to a bank, and I'm like, okay, I got some buddies on the phone. I'm like, hey, just talk to these guys. I'm not asking anybody for anything, but just chat, right? And they're kind of pitching, and the banker's like, yeah, but I have this and that. And it was what it really was. We kind of got into this cycle of, this is my side of the world, stay on your side of the fence, right? And the fintech guys are like, why? And I made the comment in the middle, I'm like, what if they just showed up in your town and did what they do? And he's like, exactly why we can't let that happen. I'm like, why don't you partner with them before they kill you? And it was funny because the banker was laughing his ass off. He's like, after the call, he's like, I'm so glad they don't come to my town, man. Good point. Maybe we partner with these guys, right?
Exactly.
Yeah.
Some of you guys. That's great.
We hear that occasionally. Some of our team was actually in Louisiana earlier this week doing an educational presentation for how to successfully partner with fintechs, generic, not Upgrade specific. And the big thing is capitalize on the things they're good at that you're not good at. Like it's very, very simple. Use them in that way. We tell people this, like we have a sophisticated credit model. We do stress testing. We can help you stress test the portfolio. We acquire the customer acquisition, like the average cost of customer acquisition. I think we all see the flyers that come in the mail. I'll give you $1,000 to open a checking account. Like that's the average cost of customer acquisition. So if you can acquire one from us, I mean, there's a lot more knock-on benefits than just, asset sale, which is of course what we're trying to do in terms of interest income. But there's a lot of knock-on benefits that we tell folks to evaluate when looking at fintech partners, because you can rely on their expertise. You can cross-sell their customers. There's a lot more than just maybe what was on the table with your partnership.
I love it.
I have one for you. So, all right. So there's been a lot of talk, especially post SVB, right? Anyway, just this idea of it's sort of the next phase, the obvious transition of financial services delivery. Okay, so as a traditional bank, what do I do in-house myself and where do I partner? And I mean, let's be honest, guys, you partner everywhere and you do nothing in-house is the answer, except the freaking charter, right? Now, the two ways to do that would be sponsor bank of record, right? Or partnering with somebody on the more traditional. You guys look a little more like a vendor relationship, right? Not that you
Yeah,
want to be called a vendor, nobody does, right? But
not
more
a traditional
so than
vendor, but yeah,
yeah.
Like, we prefer partner.
thank you.
There you
It's
go.
like that
There you
commercial,
go.
I'm a landscape architect.
Right. But I mean,
Exactly, not a gardener.
that's perfect. That's perfect. But I mean, in a banker's mindset, right? There is the partner with fintech is typically a scary, right? Because partnership dictates something a lot different than the level of service and SLAs from a vendor contract.
Yep.
Very different.
Right.
Yeah,
So I mean,
very different.
that's vocab, I know, but is that a fair assessment?
That's fair. Yeah, that's very fair. You know, one thing too, just thinking about some of our existing partners, a lot of people have partnered with us because perhaps they don't have consumer exposure. So we're consumer credit, you know, personal loan, card, auto refi. We've partnered with some agriculturally focused banks, commercial banks. They don't have in-house consumer underwriters, consumer products. So entering a time like now when diversification is going to be important.
I've never thought about an ag bank having to worry about deposit concentration risk.
That's great.
Yeah. Yeah, so that's another way. So we've actually talked to a lot of folks they're commercial bankers. They've never engaged with consumer lending. They don't have a consumer credit team. So they lean on us to get some diversified product.
That's awesome.
Yeah, I'll tell you
It's
what,
interesting times.
I couldn't wait to have this conversation with you. And actually, I'm glad, we had to postpone this if everybody didn't know that because, the handle broke, right? The Fed broke the system. But
There you go.
It was all their fault.
I mean, we've been excited about this one, man, because of what you do. And I think actually this is a benefit that we actually had this after some of these events happened, because I believe it shines a light on your capabilities and what you're able to do, not only for the bank, but for the system.
Shine a light for you there, buddy.
Well,
Said shine a light, man. I got a light.
I knew this was going to be more interesting when we had to cancel last week. I was like, what are we going to talk about next week?
Right. Building, and you can't sit on my head for 2 weeks, without weird stuff popping out. So.
Yeah, but this is really cool. And I think all of each one of the categories of things that you do, whether it be, the sweeps program, whether it be the consumer lending program, I mean, all of the different parts and pieces, seemingly unrelated, even though it's in a singular business. And so it's almost like a cafeteria of options that you can bring to the average banker, right? And think that through for a second. When we saw what we, were talking about early on about banks, I love the idea of bankers helping bankers. I'm kind of big on that. And bankers coming to the rescue of other bankers, the larger banks coming in to help a regional, right? It's same theme. Your entire company's built around that theme of just, hey, we help. We spread these things around wherever it needs to be. If you need to take deposits from here, or you need to have loans from there, need to move monies here or have deposit brought to you. All of these different options and opportunities of the ways that banks traditionally make money, the sources of funds and the uses of funds, and all of those areas, you guys have dissected that and then perfected your product offering to where everyone wins.
That's sorry, go ahead.
No, it's okay. I would say that's probably one of the biggest reasons people love us is just the flexibility. So like there's no minimums. There's no, you need to do this for 6 months. There's no minimum purchase amount. You can stop at any time. Not that we like that, but people can stop at any time. And what we've seen in this market is things change really quickly, and bankers need to be able to change their asset strategy quickly. I originally was going to do this much annually. Well, it's changing post SVB, and we can work with that. So we have one person on our team, Jim Quinn in the Southeast. He always calls it the asset menu option. Like it's whatever you'd like.
Good guy, I like
that's
him.
perfect.
Yeah, and it's built to order, so we can kind of customize geography, credit, whatever you want to buy for how as long as you want to buy.
That's huge. My weird thing here, guys, is that so much of the banking software market is selling freaking software, not products or solutions, right? If you just
It's not software,
logo you could think of, right? Yeah, I mean they sell products and solutions to banks.
Yeah,
Yes, man, that's so different from look. I think every banker would tell you of all the software that they have, they are probably a large part of the problem. Just deploying the stuff, right?
They have,
Being
yeah.
able to use it and support it and everything else. It's not where banks have thrived for the last few decades. You've been around to see them, right? Come
Yeah.
on, man.
I'm kind of new to this game.
Decades.
Yeah.
I
Yeah.
mean, if a partnership needs multiple new FTEs, it's not a good partnership. Like that's not going to work.
I love it.
Well,
That's
this is
awesome.
your final thoughts part?
Yes. Okay. So absolutely anything. And I know there's all kinds of stuff on your brain, but like final thoughts of anything that's on your mind you want to talk about last few minutes, anything at all that where's your head at? What's going on?
I'm curious what's going to happen. I think we all are, and what we're going to see in terms of deposit outflows. Like everyone is nervous. I think we're monitoring our deposits. We've seen no outflows. So I think that kind of bodes well. Our customer is not the stickiest customer, but extremely predictable that they go to the highest rate. So I think what I'm really excited, not that nervous, I would say I'm more bullish on is what happens in deposits in the next 6 weeks.
Right.
Yeah. I mean, the thing is, when you pull deposits, they have to go somewhere.
They got to go somewhere. People think they're leaving the system, inflation, these things. I
agree.
don't know.
They gotta end up somewhere. And the other thing is, if you think about it, back to my Twitter comments, it's kind of like Wall Street bets, right? I mean, if you actually, I won't mean names or deep research, but if you look at some of the things behind SVB, if you looked at the short positions and the put options, there was a lot of familiar names that tore them down, right? And so I don't need to go to the conspiracy level of like who's got what Twitter account to crash them, but we're definitely playing some stock trading off of all of those.
This event has happened before. In 1933, we put together the Fed Reserve and the Banking Act. And
I thought you were going to say, well, no,
I thought you were going to say we.
I don't remember this. I was in my 20s.
Hitler came to power or
Yeah,
something.
that was my early 20s. But FDR came out and told everybody at that point in time that we have nothing to fear except fear itself.
Yeah.
Everybody's heard that line. This is exactly the moment that he said it and why he said it. And we're reliving it right now today. We have nothing to fear but fear itself. Okay. Think about that when you're building your personal brand or you're trying to sell your product on the backs of this right now, because our system is built on faith. And if we don't have faith, and I'm going to say this last thing, if you don't have faith after watching 11 banks pitch in deposits together to help save a fellow bank that they didn't need to do, that wasn't what we would expect. I've never seen anything like it. And I mean,
it's a beautiful thing, for lack of a better word.
Yes, it's great stuff. I mean, it's a time to be inspired, not a time to sell fear.
That's the upgrade attitude as well. Yeah, we're faith will take us through a lot of this. Not going to have that uncertainty.
I'll tell you what, we want to see your folks out at the roundup this year to tell everybody what it is you do, because what you're doing.
Can't wait. We're all getting our cowboy boots and hats ordered for our team that's not in Texas.
Everybody has a blast.
It'll be a great time.
But yeah, there's the things that we want to showcase for bankers is opportunity zones like this that exist out there that they may not be aware of.
You bet.
And congratulations to what you built.
Yeah, I mean,
and the insights and
success.
Just the wherewithal to put all this together is amazing.
Very sharp people.
You had to think ahead at scale to be able to do this. And I don't know if everybody gets that, but the software people out there do.
Which, to the point, we years and years ago made a bad bet because we didn't think anybody could be that sharp and that good.
Exactly.
Which is a hell of a compliment to you guys today. It really is.
Thank you. We appreciate it very much.
Our apologies and also our thanks. Yeah, we're humbled by you guys. You've done a great job.
We appreciate it. Thank you.
Thanks for coming to see us. We'll see you next time.
Thanks for having me on. Bye-bye.